Welcome to the afternoon review. As usual, we will be starting off with the US dollar. For the US dollar, we will forecast the US economic growth to slow to 1.7% in 2025, then rebound to 2.2% in 2026. And this outlook reflects the expected timing of Trump-era policy shift, where tax cuts and deregulation may eventually outweigh the drag from tariffs and stricter immigration. And however, if negative policies are implemented first, growth could face further downside risk. And given ongoing uncertainty, we will update our forecast as needed. Given the mild upward inflation and solid economic growth, we believe that the Fed's interest rate cuts will be weaker than the market expects. It is expected that the cumulative interest rate cuts will be 50 basis points in 2025, implemented in June and September respectively, and then enter a long-term policy wait-and-see period. And next up, WTI crude oil. Oil prices rebounded last week as US-Iran nuclear talks opened the door to an eventual easing of sanctions on Iranian crude oil, and trade tensions kept demand concerns alive. A protracted trade war is likely to reduce the oil demand growth this year. However, in addition to refinery demand for crude oil versus oil supply, the seasonal increase in oil demand in the summer will be key to watch. Gasoline and oil prices soar almost every Easter holiday, but this year's gains are more than what meets the eye. On Tuesday morning, the Keystone Pipeline was forced to shut down due to a pipeline rupture in North Dakota. The incident disrupted Canadian crude shipments to US refineries, which pushing up the oil and gas prices, though they have since fallen back. And last but not least, we will be talking about gold. Gold's latest rally is driven by strong institutional inflows, with gold ETFs adding 226 tons in Q1, which is the biggest jump since late 2020. Despite this surge, investors' allocation to gold remain below past crisis levels, suggesting more room to run. While rising prices are weighing on jewelry demand, this pressure may ease over time. Tariffs are also in focus. If the economy worsens, the Fed may cut rates and restart QE, potentially fueling another gold surge, though a recession still seems premature. Thank you for watching today's afternoon review.